Good morning and welcome, ladies and gentlemen, to our webinar today, which is brought to you by Shared Services Link in association with our sponsor today, Pagero, a part of Thomson Reuters. Today, we are looking at Belgium. We have a 6-month countdown until Belgium goes live. And so we are studying what needs to happen in order for us to be comfortable about January 1st, 2026, when the big bang is introduced in Belgium. So thanks for joining us today. My name is Susie West. I'm the founder and CEO at Shared Services Link, and I'm delighted to be introducing as our two experts today, Gert Cassius, who is Regulatory Associate at Thomson Reuters, and Tim van der Bocht, who is Account Executive at Thomson Reuters. It's been a pleasure working with Gert and Tim over the past couple of months, so I'm delighted that they are with us today. You will have questions to ask. I know you will. It's becoming a very overwhelming and intense time for many of you on the line today. So do make sure that you get your questions answered. Post those through to me on the GoToWebinar chat and question panel, and I will put those through to Tim and to Hertz in the last 10 minutes of this webinar. You also will likely want to share these slides with your colleagues. So as mandates and e-invoicing is very much a cross-function collaborative effort. So you'll want to share these slides with your colleagues in IT, finance, etc. So these slides will be made available for you afterwards. You'll want to listen again. These slides will be made available for you to do that too. So let's just jump straight in, and then we've got a couple of polls, and then I'll be handing over to Gert. So many of you will be here because you'll be here because you have operations in Belgium, and of course January 1st 2026 is a huge deadline for businesses in Belgium, and it's approaching us very, very rapidly indeed. It's a sweeping change from an e-invoicing perspective, because January 1st 2026 companies operating in Belgium must be live with electronic invoicing, and the processes that we have today to issue invoices or receive invoices will no longer be accepted, will no longer be valid. And this is one step. The January 1st 2026 step is the first step towards real-time reporting, which is happening in Belgium in 2028. So we're going to be looking what you need to do, what you need to have covered. Is a bit of a checklist really for what you need to have in place in order to be live and ready for that 1st of January 2026 date. We'll also be looking at how the Belgium approach is really a bit different to the approach that's happening in Germany, France, Italy, and Spain, and what these kind of differences mean for you. So the idea is that you will come away knowing quite a bit more than perhaps what you know already, or at least confirming the huge research that you've done so far. So let's jump in and look at our first couple of polls. Like to find out who we have on the line today, please. So if you could tell us what function are you operating in today? Are you mainly in tax? Are you in accounts payable, accounts receivable? Are you in IT? Or would you say you have a bit more of a cross-functional role, shared services or GBS role? So we've got a lot of people on the line today. This is a very popular webinar. So just a reminder, we do share results live. So we've got about 4 or 5 polls. So each poll we will be sharing the results live. So we're at about 70% of you responding, which is great. Any final responses coming in, please. Closing the poll in 3, 2, 1. Let's have a look at those results coming up on the screen now. Thank you. I'm loving the participation here. 78% of you responding, so that's great. Now, interestingly, the winner here is we've got 29% of you from cross-functional GBS shared services, and then second position, 25% of you from tax, 18% AP, 18% accounts receivable, and 11% of you are from IT. Hopefully those results actually are helping you develop some thinking as well. So let's go on to our second poll, which is how prepared do you feel right now for what's coming January 1st, 2026? How prepared do you feel for Belgium, the Belgian mandate? Would you say that you feel very prepared? You just want to make sure that you're up to date and you've covered all your bases. Would you say that you're mostly prepared, but there's a bit of fine tuning that needs to happen that you're hoping to get from this webinar? Would you say that you're somewhat prepared, but you've got a lot of work to do in the next 6 months ahead? Or would you say that you're actually a bit concerned about how prepared you are for the mandate? So if you haven't already responded, please do so. We're at about 63% of you responding to this one. And if we could get the numbers up a tiny bit higher, I'd be closing the poll in 3, 2, 1. Let's have a look at the results. Again, thank you. Bang on 70 there. And let's share the results with you. So we've got none of you saying that you're very prepared. You just wanted to make sure that you've checked off everything. 18% of you saying that you're mostly prepared, but with some fine tuning needed. 53% of you say that you're somewhat prepared, but you've still got a lot of work to do. And 29% of you are saying that you're concerned about how much preparation there is to do for the mandate. Right. So thanks for sharing that with us. And now I would love to hand over to Hertz. Over to you, please, Hertz.
Thank you so much, Susie. So essentially, I want to run through an agenda for the audience first and foremost, yeah. So basically taking you through what we'll be showcasing in this session today, just to make sure that everybody's on par. And, post session really does have a full understanding of the mandate requirements, the impact, and so on. So really what I'm going to showcase for you all is an overview of the new and upcoming requirements in the realm of CTC and e-invoicing, as well as showcase some relevance of the Peppol framework as it intertwines with some VITA requirements, as well as the Belgian mandate. And then I will defer to my, co-panelist, Tim, to give you guys a, description on the impact that these mandates and requirements will have on business. And then we'll, reserve some time for a Q&A at the end of the session. So I will dive right in and approach things from a bit of a reverse pyramid, right? So showcasing sweeping legislation across the entire European Union and showcase furthermore how that whittles itself down into more specific Belgian legislation, and then ultimately describe to you all how you're supposed to be adhering to these requirements, implementing them, and the like. So really what I'm showing here is the VITA initiative, so to speak, right? So VAT in the digital age, chronologically as of November of last year, achieved unanimous agreement within the ECOFIN, right? And then, just a handful of months later, it received its final stamp of approval. Now, the initial legislation was published in 2022, so it did take some time to, get fine-tuned and then ultimately receive that stamp of approval. But as soon as it got that stamp of approval in March of 2025, or, March of this year, it didn't take long for certain things to come into force. So by that, I really do mean that as of April of this year, the requirement to obtain a derogation to implement domestic e-invoicing and DRR obligations no longer exists, right? So markets within the European Union as of today don't need to request permission from the European Commission to implement domestic e-invoicing obligations, right? So the VITA ratification did away with that requirement. So we're seeing a lot of markets expressing their intent to implement domestic e-invoicing at a very rapid pace. And Belgium is really no exception, right? They're a market that definitely did have their sights set on receiving a derogation. They put in all the paperwork to do so, but with the ratification of the VITA initiative, they no longer needed that derogation. So they really did transpose into their legislation e-invoicing requirements, and now as of January 2026, they'll be able to, full on implement those requirements for taxpayers. So showcasing, the timeline, not just from a Belgian standpoint, but let's say a VITA timeline, right? We'll see that once again from April, we will no longer require derogations for markets to implement e-invoicing obligations. And then from 2026 to 2027, we see the implications of VITA on let's say, invoicing formats and some content requirements that all member states have to adhere to. And if all member states have to adhere to it, naturally all businesses need to equip themselves with the tools that they need to make sure that they're adhering to these different requirements. And then to take it even a step further, certain things become even more mandatory, right? In 2030, we now have mandatory e-invoicing for cross-border or inter-community transactions, and as well these mandatory DRRs, these digital reporting requirements. Um, Still sprinkling in the option as well for domestic mandates to pop up even simultaneously. There's potential for all of these things. So there's multiple angles in which I think it behooves the audience to know about so that they can tackle all of these different requirements as they do come in from different angles. And we're not just looking at e-invoicing and DRR exclusively, right? There are other transactional reporting obligations that are not necessarily promoted per the VITA regulation, but VITA does welcome them, right? So this is transport, this is potentially B2C. These are different digital controls for different types of transactions that governments want to monitor. And so the VITA initiative um, essentially allows that, right? They state that it is very much allowed that outside of e-invoicing and DRR, markets may implement these different transactional reporting obligations digitally just to make sure that they can have a greater grasp on the economic traffic that goes on in their particular jurisdiction. And then lastly, on the VITA timeline, we see that by 2035, member states that had an existing CTC framework prior to January 1st of 2024 now have to harmonize their DRRs and e-invoicing requirements with those laid out by the VITA initiative. So it seems like a lot of sweeping legislation, all encompassing or rather headed in a particular direction. But yeah, once again, behooves the audience to know these things because they're coming swiftly, they're coming fast, and they do have a lot of potential to change a lot of processes. So it's better that participants get on board now, or at least educate themselves now, so that they can rest a bit easier as these things start to come into force. But with that, as I stated, we're reverse pyramiding here. Now we can home in on a more specific and particular case, which is Belgium. So Belgium has opted to essentially align itself with a lot of the VITA proposal or the VITA initiative sooner rather than later, right? So they have a mandate commencing in January 1st of 2026 that they no longer required a derogation for, which put them in a pretty good position. Once again, as I stated previously, they had already put in all the legwork to receive derogation, but it was never finally approved by the European Commission because there was no need, as the VITA initiative was going to receive approval prior to anything else. So they really put themselves in an advantageous position to implement this obligatory B2B e-invoicing mandate without having to do more than implementing the legislation domestically. So the scope now encompasses Belgian VAT registered businesses for domestic B2B transactions, right? With the focus being fixed establishments on Belgian soil. So you have to have a Belgian VAT registration and your standard place of business has to be on Belgian soil, right? And this will exclude B2C and VAT exempt entities. So when I say VAT exempt entities, I mean those that engage in, let's say, business within the sectors of healthcare, education, um, oftentimes insurance and certain financial services. And B2C is excluded come 2026, but there are some implications for them moving into 2028 and beyond. And that's something that I'll outline as we proceed through this presentation. But I think once again, these are definitely points that behoove you all to know. So moving forward, we can discuss the format that is encompassed by the mandate, which is by default the Peppol BIS standard because the promoted transmission method for issuing and receiving electronic invoices, which is the requirement moving into January of 2026, the promoted transmission method is using the Peppol network, right? Which by default requires the use of a Peppol BIS 3.0 format. There is room for deviation from Peppol, given that there is mutual agreement between buyer and seller. And if that is the route that market participants choose to head down, the overarching requirement is that invoices must still be exchanged in an EN 16931 compliant format, but Peppol BIS will always be touted and promoted first and foremost, and then everything becomes a bit more subsequent. So that essentially is the scope, the transmission method, and the like. But to really bring home the scope of taxpayers, I want to showcase even more some of the exemptions and some of the tweaks that have occurred in the context of the Belgian mandate, right? So when we talk about exemptions, there are even special flat rate regimes that were supposed to be encompassed, and they are exempted for a certain period of time. That's really up until January of 2028. But to take it even a step further, as I stated, there are certain, I guess, sectors that are completely out of scope. And yeah, that is if you carry out VAT exempt transactions almost exclusively if that's the nature of your business, but simultaneously, VAT exempt transactions in general are exempt from the requirement of issuing and receiving electronic invoices. So if you are in a sector in which, you exchange goods or services that aren't exempt, but let's say you perform a tax exempt service or you are transacting with a VAT exempt entity, you are not required to issue and or receive electronic invoices on that front. And I think once again, that's something that's very important for taxpayers to know or market participants to know so that they can essentially configure some kind of setup to make sure that what's VAT liable ultimately issues and receives electronic invoices and what's not VAT liable follows a completely different process. But it's not to say that you cannot issue an electronic invoice for those VAT transactions. You can if that is your desire, but it's not mandated. So that's something that I want to make abundantly clear. And the last thing I want to make clear here is that to clear up any confusion, right? Because there has been a lot of information and news that has come out into the market. If you are a foreign taxpayer, so if you have a Belgian VAT registration number, but you are headquartered or you have offices in any other member state, Austria, Sweden, Finland, and the like, you are not on the hook for AP requirements, which means that you do not need to have the capabilities to receive electronic invoices from your Belgian counterpart. You are completely out of scope. So once again, the mandate whittles itself down to domestic VAT transactions between domestic seller and buyer that have a VAT registration with a fixed establishment on Belgian soil. That is essentially the scope of the mandate. Who is on the hook for these e-invoicing obligations? So some more mandate requirements, as it doesn't just apply to B2B, and the mandate does have the potential to evolve. And Belgium has essentially already announced its intent to evolve the mandate. I want to showcase that B2G rather transactions have been in scope since 2019, and that is not going to change moving into 2026. So those same processes for issuing invoices in the public sector remain the same. So the Mercurius platform will still act as a repository operating on the Peppol network for public sector entities to receive their electronic invoices, but suppliers still need to issue electronic invoices via Peppol to their public sector counterparties, right? And so now some more updates on that front, or on the e-invoicing front rather, is that we talked about what comes into place in 2026, things expand to B2B, but then into 2028, Belgium intends to expand some of the requirements, right, into near real-time reporting a transaction between VAT liable businesses. And as I stated before, B2C is out of scope for 2026, but in 2028, if you have a GKS system, which is a registered cash register system, you will then be on the hook to report data from that system in real time. So things do graduate, right? So the intent is to graduate the mandate to receive data in real time from cash registers, payment, and invoicing systems. The last thing I want to convey here as well is I'm sure that market participants in Belgium are aware of the Hermes platform, and for those of you that aren't, it was essentially a platform that operated on the Peppol network as well that could transcribe or transform structured data into a PDF that faces obsolescence in that the obligation beginning January 1st, 2026 is that market participants issue and receive electronic invoices in a structured format. Because the Hermes, I guess, portal or platform in and of itself transforms data into a PDF, it no longer fits the obligation or mandate requirements, and thus it becomes obsolete. So market participants really do need to do everything in their power to make sure that they're covering the mandate requirements from end to end, and that is being capable of issuing and receiving electronic invoice data in an EN 16931 structured format. So as I was discussing the future requirements, I stated that there will be a requirement to, I guess, report data in near real time. And it seems that all roads point to the CTC model evolving into a decentralized Peppol approach, what we call a DCTCE. And what that entails is seamless issuance and reception of an electronic invoice via the Peppol network with a simultaneous reporting obligation from the sending service provider to kind of report the invoice or transaction data to the tax authority in real time, still operating on the Peppol network. And while once again, this hasn't been officially confirmed, attendance in a lot of these different forums concerning the Belgian mandate have yielded a lot of pointing in the direction of Peppol, right? And stating that the Peppol will be the approach to satisfy all real or near real-time data transmission. And anything that doesn't comply with that will yield audits, right? So if you are choosing, between a selling and buying party to issue and receive electronic invoices outside of the Peppol framework, you still need to be able to report via the Peppol network, right? So once again, Peppol will always be promoted while it's not mandated. Certain requirements will push market participants in that direction. And anything that, once again, doesn't comply or doesn't match has the potential to yield audits. So I want to make that very abundantly clear to the audience to showcase that, moving forward, once again, it behooves you to have a all-encompassing solution to make sure that nothing slips through the cracks, and so that you're not up against the wall when the tax man comes a knocking, and just making sure that all of your data is on par with what's being requested by the Belgian tax authority. So those are the future requirements, and I think showcasing a visual of what complying through and through would look like is essentially the diagram before you. So you'll see in the primary business flow and supply chain what things look like by and large, right? So suppliers and buyers issuing an e-message over the Peppol network quite seamlessly, or just adhering to EN 16931 standards, and you can still do that via service providers. But that is the seamless exchange of, let's say, an electronic invoice from point A to point B, from supplier to buyer. And then it showcases the governmental flow, right? How to comply with the reporting obligations, right? And making sure that data ends up where it's supposed to. That's the e-taxpayer registry and the tax data feed platform. And then ultimately, when everything's all squared away and everything's done, we'll push things to the government back end, or at least the tax authority will have that obligation, right? To make sure that they're analyzing the data accurately and making sure that everybody's playing fairly and doing exactly what they're supposed to be doing. And that essentially is a closed loop of how Belgium really is approaching the mandate from 2026 into 2028 and beyond, and ultimately aligning themselves with the VITA requirements when it comes to not only making sure that e-invoices are issued, but the e-invoice data and transaction data is ultimately reported. So, things have more or less come from two different perspectives. We're looking at a business perspective and a fiscal perspective. The fiscal perspective is you e-report your data. Once upon a time, this was just manual submissions that were done on, quarterly basis, monthly basis, and the like. And, invoicing or e-invoicing is the business perspective, right? Making sure that you can minimize your DSOs, right? Making sure that you get paid as abruptly as possible. So making sure that you're invoicing I guess processes were as efficient as humanly possible, right? Those are the two perspectives. But when we showcase convergence, we see that in the model that Belgium plans on operating, CTC sits in the middle in that it brings together the fiscal and business perspective to make sure that once again there is seamless issuance and reception of electronic invoices, making things a bit more efficient, especially when it comes to minimizing DSOs and DPOs, while simultaneously making sure that the government is happy and that they get the data that they're requiring to make sure that they minimize the tax gaps and also adhere to these overarching uh, you know obligations and legislations that are sweeping, more or less the VITA proposal. So I want to, I guess, bring things home here with saying, why could Peppol be the option, right? Why would Belgium lean towards Peppol? Why would the VITA initiative lean towards Peppol? Well, the fact of the matter is it satisfies a lot of the obligations that are outlined by the legislation by default, right? So in the upper diagram, we see that historically, it really is an efficient means and method of issuing and receiving electronic invoices by parties that can validate data and make sure that it gets from point A to point B quite seamlessly. It is showcased, standing the test of time. It's well established. It's proven for cross-border data exchange, and it has all of these accolades. And it's used not only across the EU in a lot of B2G obligations already, but it has expanded to a global extent, right? And now, they've figured out a way to move past the standardized form into the regulated form, which doesn't interrupt processes at all, right? It's still seamless issuance and reception between buying and selling parties, but simultaneously still allowing for the tax authority to get involved and get that requested data. And all service providers have to do is issue in different directions, right? So there will be the tax data reporting obligation that service providers have, the built-in functionality to satisfy, which will never interrupt or detract from the angle in which they're supposed to validate data from a quarter two perspective and make sure they issue that to the receiving service provider. And then the receiving service provider ultimately gets that data into the hands of the buyer. And that is a closed loop as far as transactions are concerned. So that's essentially why I guess Peppol could satisfy things in the context of VITA and the Belgian mandate more specifically. But, we can look at it from, even further, right? Like not just Belgium and VITA, but VITA sweeping across the entire EU and kind of closing things off based on those very specific requirements that Belgium is planning on satisfying preemptively. So the e-invoicing aspect, once again, is seamless issuance and reception between supplier and buyer. Moving into, let's say, data reporting requirements, right? So Belgium has expressed its intent to implement that near real-time data reporting in 2028, and that showcases alignment with the VITA proposal because, the DRRs associated with VITA are supposed to be done in near real time for suppliers. And if it's a self-bill or from the purchasing perspective, it's supposed to be done more or less in 5 days. All right. So, it showcases the technology involved, it showcases alignment, and then it also showcases ultimately what's supposed to end up in the hands of the tax authorities and into the hands of the central VIS, which essentially is the central data repository for all transactions for, all cross-border and potentially domestic trade within the EU as a whole. That is something that governments want to monitor to ultimately minimize tax gaps and make sure that their economies are flowing as efficiently as possible and moving just towards this digital age, right? Digitalization, taking the administrative burden off of not only taxpayers and market participants, but tax authorities as well. So, moving on to why the move towards decentralized approaches, it showcases that the business processes don't need to be interrupted by these tax bolt-ons, right? So essentially, once again, showcasing seamless issuance and reception never being interrupted, and the tax authority still getting the data that they want, right? It's flexible and democratic in that, once again, it doesn't interrupt anything, and everybody more or less gets what they want. And naturally, in a democracy, not everybody gets 100% what they want, but everybody attempts to get what they need, and we try to make it as fair as humanly possible. Moving into the future, there's a lot of flexibility and customization that is possible in the context of Peppol as well, you know, or where it comes to adding attachments, adding different obligations that Vita promotes as well. There is a lot of room to introduce so much more and scale in the context of Peppol and DCTCE. So these are a lot of the reasons why you know, markets are moving towards that approach. Vita aligns with that approach, and naturally we discussed how Belgium is preemptively aligning with that approach, just to make sure that they're, you know, essentially future-proofing their CTC model. So that yeah, concludes why, you know, markets are moving towards that, and that essentially is the regulatory aspect of what is going on in Belgium in accordance with Vita.
Great, thanks so much, Hertz. That was highly informative, and we have a lot of questions coming in already. So let me move through these two polls at a pace, please, and then let's hand over to Tim. So where are you with e-invoicing in Belgium in terms of a solution? Would you say that you have a solution in place and you're satisfied with it? Maybe you have a solution in place, but you're unsure about the compliance of the actual solution that you're working with, or your approach. We are about to choose a solution, or would you say that you're evaluating the market and looking for a solution today? If you could let me know, please. We're at about 55% of you responding. If you haven't already, let us know. Please do so, and we'll be closing the poll in 3, 2, 1. Thank you so much. Let's have a look at the results here. Just over 60% of you responded. So you can see that 21% of you say that you have a solution in place and you're satisfied with it. 32% of you talk about how you have a solution in place, but you're unsure about the compliance. And that, I imagine, is making you a little bit uncomfortable. 27% of you are saying that you're about to choose a solution, and 20% of you are looking for a solution today. Thank you. Oh, okay, sorry, I don't think I actually pressed the share button, so let me just do that now. Okay, so let's move on to the next poll that I've got, and then I can hand over to Tim. For e-invoicing, what other countries are in scope for you? Is it just Belgium that you're looking at? Is it Belgium and a cluster of other countries? Is it really the whole of the EU, so all 27 member states, or is it the EU and international? So what other countries are in scope for you and are on your roadmap ahead? Is it just Belgium and a cluster of countries, all of the EU, or would you say it's the EU and international? So again, we're at about 66% of you responding there. Closing the poll in 3, 2, 1. Let's have a look at the results. Thank you. Coming in at 70%. So that coming up on your screen now. 11% of you just say it's Belgium. 35% of you are saying it's Belgium and a cluster of countries. 15% of you are saying it's the whole of the EU. And 39% of you are actually saying it's the EU and international. So a large task ahead. All right, thank you for that. And now let's hand over to Tim.
Thank you, Susie, and thanks so much, Hertz, on the details on Vita and of course the Belgian mandate, and also sharing a little bit on what the future will hold for us. In this next section, we're going to spend some time on how this is actually impacting business, the way we do business, and what's needed for you to ensure you're working with the right partner in Belgium. So when we're talking about impact, it's fair to say that this mandate is here to significantly transform the way we're doing business and the way we handle invoices and compliance in Belgium, which will offer both challenges to your organizations as well as some great opportunity there as well. So the rules are very simple. Starting January 1st, 2026, no more PDF or other non-electronic invoices are allowed for any domestic transactions in Belgium, which will require you to adapt to new processes as well as new technologies to comply to this mandate. And although this does involve initial costs and of course time and effort to investigate what is the right solution for us, the benefits are really there and they can actually really show. An example, the second point on this slide, and this is known to many of us, e-invoicing is definitely there to streamline your accounting processes, and this benefits both sides of the trade. So from a buyer point of view, obviously, if you're doing this manually right now, this takes away a lot of your workload on keying in data from PDF or other types of invoices. Maybe you've automated it some way with OCR technology, so you have a scanning solution that is actually reading those invoices for you. Now you're actually spending less time on mapping out those different PDF formats or making sure that your OCR has captured that data correctly. So there's a great time efficiency there, which improves your invoice processing. But also for a supplier, because this buyer is actually benefiting from better processes and better data, this will also positively influence your day sales outstanding. And in overall, it will of course also reduce the back and forth communication between the different parties. And these benefits, they really show. In one of our more recent case studies, we found a customer that saved 65% of their working hours by switching to e-invoicing. And this was actually in a market where e-invoicing was not mandated at all. So imagine the benefits you can gain when 100% of your domestic invoices switch to electronic. In the case of the customer, it actually resulted in a very fast return on investment. I believe it was a little bit less than 10 months, which of course also a great result to have, especially if you consider the initial investment in time and money to find the right solution. Finally, it will also require you to think beyond what's happening today, and you also need to strategize for the future as these mandates constantly evolve. And Hertz made this very clear in this part of the presentation that also the Belgian mandate will likely change over time. And even though it is some additional effort right now to find the right solution, that's also thinking forward. You are actively future-proofing your business for what is coming, which will also save you time later on, because you don't have to go to market again and again every time something little changes. So do find yourself a solution that's flexible and easy to adopt. So with all the different options that are out there, how do we actually find the right solution for our organization? And how can we tell the difference between the different service providers, especially with so many service providers that are out there? There are, of course, many ways to compare. We want to focus on 3 of them today. We want to have a look at the compatibility of the solution to your IT landscape, the value add, because it's often also more than just meeting mandatory requirements. You actually want to improve the processes of your AP and AR teams as well. And then the final point we want to discuss today is how scalable is this solution. So if you look at number 1, which is going to be the IT landscape, ease of integration with your existing systems is critical here. And it's here very important to work with the different stakeholders in your organization. So think about your IT team, your AP team, as well as the AR team, to make sure that you have mapped out all the systems that are in play. This could be multiple ERP systems used across the business. It could also be any other financial management system, like an AP automation solution where you might want the service provider to be connected to. And ideally, in this scenario, you find yourself a solution that can actually cater for all these systems that you have in use, instead of having multiple solutions in play to deal with this mandate. So focus here on something that's actually either ERP agnostic, or in your solution design, consider to maybe put some middleware in between to simplify this setup. Because if you end up with a very complex setups, as these mandates evolve over time, it will be a big project to keep up those systems up to date. Also, an important thing to mention about the IT landscape, if you're still about to implement the solution, or maybe you just have started, do take into consideration that it does take time to properly implement and integrate the solutions to your systems. And you want to leave enough time for proper user acceptance testing to make sure that everything is working before this mandate will go live. But because it is going to be a clear cut when the 1st of January is there. The second point we want to consider is the value add the service provider will bring to your organization. So differentiate between service providers offering more basic functionality versus more advanced features that can actually improve the processes along the way. So a good one to mention is a service provider that potentially can also cover other document types. So even though the mandate only requires you to send electronic invoices, it's actually also an opportunity to start looking into e-orders or the exchange of any other document you find in your purchase to pay or order to cash cycle. And another example could be advanced analytics or dashboards to support you measuring KPIs to financial forecasting and even ESG. There are providers that are out there that actually can show what the impact is of switching to electronic invoicing. So if this is a KPI for your organization, there's actually something to gain there as well to actively measure the improvements that are made. And even though this list is not exhaustive, another great one to look at is, well, can it add value to our AP and AR processes? So can we potentially work with the data with enrichments and validation? So before it leaves or enters your systems, you can actually add information or just making sure that everything is correct before it leaves our system. So it's all about not just meeting your mandatory requirements, but also thinking about enabling your AR and AP teams to do their work effectively. The final point I'd like to mention today is the scalability of the provider. As your business grows, your service provider should also be able to grow with you. So they need to be able to handle increased transaction volumes without compromising on the performance. And of course, it doesn't only go for your own transaction volumes, but actually for any customer they may serve. And it's also about the required effort to implement a solution. We can definitely expect an influx of work of our organizations that try to be ready in time for the mandate. So do make sure that your partner or your service provider that you've decided to work with can actually support you and make sure that you are implemented in time for the mandate. Because those mandates constantly change, also think about the flexibility and the ease of adapting to new requirements. And in this case, actually, it would be great if this can be done with as little intervention from your side. Of course, there's always a even balance between service provider doing all the work and needing to engage with the end customer to make sure that the systems are up to date. But you do want to find a solution that actually doing most of the heavy lifting for you and making sure that the small little technical requirements that are changing on a constant basis are also accounted for. And then the final point, there were some businesses on this call that actually have a scope beyond just Belgium. When considering a partner, think also beyond Belgium. Ideally, you find a partner that can support you across all the markets where you're operating. Otherwise, you will have endless projects each time a country decides to introduce a e-invoicing mandate or something similar. And we can guarantee that these mandates are here, they're coming thick and fast, and they're definitely here to stay. So as we wrap up today's session, let's revisit some key points to consider when looking at 2026 and beyond. First of all, this e-invoicing mandate, it is imminent. It will significantly change the way we do business in Belgium, and it will impact all businesses that are operating in Belgium. It will be a clear cut. So on the 1st of January, no more PDF or other non-electronic invoices are allowed. And second, it's also only 6 months left to prepare. So the countdown, it is really on, and it's now your time to ensure, are our systems and processes up to date and are they ready for this? And then don't forget that it takes time to properly implement a solution and test a solution before you go live. Third, remember that the regulatory landscape is evolving. Beyond this mandate, future changes will be expected, so adaptability and forward thinking is essential here. And then the final point, it's more than just a compliance exercise. It's actually an opportunity for your business to drive better efficiency and better processes overall. So that said, thank you very much. I'm now passing back to Susie for the final polls and also the Q&A.
That's great. Thank you so much to Tim and to Hertz. So let's just do a final poll whilst we've got you just before we go into Q&A. So it's regarding what you'd like to do for the follow-up. So I think there are a lot of people on the line that might appreciate a little bit more hand-holding over the next few months. So what kind of specific type of follow-up would you appreciate? Is it a conversation with an expert like Tim or Hertz? Maybe a demo of the Pagero solution and how it can help you in Belgium, but also for your cluster of countries, Europe or EU, I should say, and beyond the EU. Or is it a demo? Would you like a demo? So as soon as possible, or would you like a demo of Pagero in the next few weeks? Would you like more information about the Belgium mandate? Or would you just like more information about compliance generally? You can tick as many boxes as you like. Let's leave that open whilst we move into questions. We've got some good time for questions and we have a lot of questions. So, okay, I think this one might be for you, Hertz. Will the XML that we send to Peppol in Belgium be considered as the final invoice in the case of a VAT audit? Or can we still use a PDF in case of a VAT audit? That's the first question I've got for you, and I think that one's for Hertz, please.
Understood. Yeah, no, absolutely. The tax valid invoice will always be the XML, right? The EAN 16931 compliant structured document. A PDF or anything that kind of replicates the structured data will only be considered supplementary, but it would not suffice or it would not be sufficient in the terms of an audit in Belgium moving forward beyond January 1st, 2026. So what's paramount here is knowing that your Peppol BIS, your XML, your structured invoice, that's your North Star. That's what will get you through an audit. That's what you're supposed to archive. That's your tax valid documentation.
Okay, and the second question from the same audience member, is it acceptable that the XML sent to Peppol is on header level and does not contain all details, just sufficient info to determine the VAT treatment?
That's an interesting question. So there are certain, I guess, content components that are supposed to be in, your standard invoice in general, right? Like certain mandatory content. And when it comes to the use of Peppol, your invoice will not pass initial validation if it does not have all those content pieces, right? So if not all of that content is satisfied. So, it's a tough question to answer. So that's the most advice that I could give you in the moment, but it's something that I can probably take offline and provide more context to at a later time.
Okay, thank you. We have an internal issue popping up in this particular organization on the original invoice reference field required in the Peppol format for credit notes. We often have situations where we have credit notes that are not referring to one specific invoice. For example, a quarterly bonus paid based on all invoices issued in one quarter. What would your suggestion be to include in that field instead?
This does sound like a very, very technical
exactly. Should we
question.
Take that one offline?
So I think, and if you already have found a partner in this scenario, definitely work with your service provider and look into this. If you're still looking for a provider about to implement, indeed raise this topic, and we are also happy to take this one offline and look into the specifics.
Yeah, okay. There might be a couple more coming up that get incredibly detailed. Let's just see how we get on. If the Peppol ID was created a long time ago by the connector, the provider, and our company, how can we create new Peppol ID for this same entity? Is this possible?
I think I can take this to a certain extent. You can have separate service providers for different flows in the Peppol network, but if it's exclusively for invoicing, yeah, I don't think there is an opportunity for you to get another Peppol ID for the same entity. It
Okay.
really depends on the flows and how you choose to approach it. But if it's singularly for e-invoicing, that is not possible in the context of the framework.
Okay, thank you. And just a quick pause. We've got a white paper that you might be interested in. There's a QR code there, so please feel free to take a photo of that QR code and it will take you through to a link. So if the head office is based in the UK and Belgium operations are via a branch of the UK head office, then does the branch fall under AP and AR to follow e-invoicing?
So if the Belgian branch once again has a fixed establishment office and you know a location of operation or business operations on Belgian soil, as well as a Belgian VAT registration number, they are 100% in scope for both AR and AP obligations domestically within the borders of transactions happening in Belgium. But as far as the UK head office or headquarters, they are completely out of scope.
Yeah, thanks. In case of customer unregistered in Belgium, how, I'm just reading this as it is, how to make sales to those customers. Can you help with that? If otherwise, I'll move on to the next question. I'm just reading it
If
as is.
they're No worries. If they're not so if your transacting party is not registered for, let's say, VAT, you know, once again, you could be doing B2C transactions, or you could be operating with somebody who doesn't meet the threshold value for registering for VAT, then those transactions are not in scope of issuing electronic invoices either.
Okay, thank you, thank you. What is the consequence if you are not ready in time for the supplier as well as for the buyer?
It's also a good question. So while it hasn't been made abundantly clear, there are already existing penalties for not complying or adhering to the requirements to issue electronic invoices in the B2G space. So one could speculate that those same penalties will then be rolled over to, or rather, they'd be broadened to encompass both B2G and B2B processes. And those penalties are financial, I think in the realm of 3,000 euros, not necessarily per infraction, but it really depends on scenarios. But what I guess I'm trying to drive home here is that there are penalties that already exist, and the risk of not being compliant by January 1st is that you will be financially penalized.
Okay, great. Thank you. And it sounds like we'll find out a bit more about that as the months go by. So next question I've got is on, okay, we have a supplier network platform in place. It's the SAP Business Network, which assures a high integration automation. The invoices do not pass Peppol. Will this be compliant as of 2028?
So if the invoice or the transaction data is both issued and received in a structured XML format, and it's replicable in that sense, you know, as far as having digital data, that portion is compliant, but it's the reporting piece in 2028 that I think people need to be worried about or watching out for. And if you cannot, you know, simultaneously report those transactions that are happening in the portal to via the Peppol network to the tax authority, that's where your biggest concern should be. But as far as issuing and receiving the invoice, as long as it's in an EN 16931 format, that's totally fine. But then when you have to report via Peppol, that should be your concern, because there is no other means and method of reporting come 2028. You have to do that via the Peppol network.
Okay, thank you. I want to ask about whether businesses in the gambling sector is exempt from the mandate.
That I would not know off the top of my head. I'll have to get back to
Come
you.
back on that one. Okay, fine, thank you. We've still got quite a few more questions, so you're doing great here, thank you. And if you do have questions and we don't get to them, I know that Hertz and Tim will take them offline. how will the customer's Peppol participant ID be communicated? It is not necessarily the VAT ID, but could also be the enterprise number.
So there's an SML and SMP in the Peppol network that allows you to search not only participants, but their capabilities for issuance, reception, and different document types. So that's probably the best path forward when it comes to looking up your counterparty in a transaction, right? Your service provider should have those lookup capabilities, and they'll do that on your behalf to make sure that from point A to point B, the invoice ultimately ends up where it's supposed to end up.
Okay.
Yeah. If I may add to
please.
that would also be one of the first thing we would do is indeed match your trading partner list against the network to make sure, okay, these businesses are indeed already enabled on Peppol and are ready to send and receive Peppol invoices straight away.
Great, thank you. Okay, will there be an option to convert an XML invoice to PDF to book it? As in to book the document based on its PDF version, but also attach the XML version for audit purposes?
Yeah, so I can take this question. So as Hertz already explained, in the end, the XML or the electronic file will be the leading document, but actually it is indeed possible. And as an organization, we would always do it. We would convert that XML into a human readable file, so everyone in the organization indeed can double check and make sense of that XML to see where the invoice was all about.
Okay, thanks. What is Peppol and how does it work? And can we can we directly connect our ERP to it rather than using a network like Pagero?
Also, in the world of Peppol, the whole framework is actually built around what they call the four-corner model, where we would have our buyer and our supplier serving as two corners and both their service providers as the other two corners in the four-corner model. So to be able to distribute through Peppol or the Peppol network in the Peppol standard, you need those service providers to be there to facilitate that that invoice flow.
Yeah, okay, thanks. And what if the invoice includes also a time and expense report? Will this be also included on the platform?
So here we're referring to sending along attachments with the invoice. Yes, that's perfectly allowed. It's possible to send attachments with the invoice.
Okay. What distinguishes Pagero as a service provider compared to the other providers out there?
That's always a great question. I think in the terms of Peppol, to kind of stay in team, Pagero is a service provider in any country where Peppol exists. And even though Peppol is a standard, there will always be small deviations between what does Peppol mean in Belgium and what does Peppol mean in Singapore. And that's actually something we can support with all the way.
Yeah, okay. Good. All right. Well, let's leave it there for now. This has been a highly informative webinar, so thank you for diving deep into the technical detail, both Hertz and Tim. And to our audience, if you would like to just give us your feedback on this webinar, please follow the QR code and give us your feedback. We always love to hear back from you. And also just to point out, we have a lot of webinars coming up in the next couple of months, specifically on the mandate. So please make sure that you're up to date and you're getting our webinar alerts for this, our webinar listing. And yes, and sign up to these webinars because they are very much engineered, designed to help you on this journey ahead. So thanks for your time today, and we look forward to welcoming you next time. Thanks a lot. Goodbye.